All right, good morning. This is your intelligence briefing for March 16th, 2026. Let's get right to it. So, here's what's on the docket today. We're leading with the economic fallout from the war in West Asia. Then, we'll hit some key updates on the political and corporate fronts, take a look at what the opinion pages are saying, and we'll finish up, as always, with the market close. Let's begin. Okay, let's start with our lead story. The economic shockwaves from the war in West Asia, well, they're hitting India a lot harder than many first expected. Now, the government is trying to keep things calm, reassuring everyone about fuel supplies, but the anxiety is definitely there. We did see some of that initial panic buying of cooking gas start to die down, but the underlying tension hasn't gone away.
And you can see why. The pressure is coming from all sides. I mean, look at the market reaction. Brent crude is up a whopping 42%, and the Nifty has taken an 8% hit. But the real vulnerability, the thing we need to watch, is in our supply chains. We're now relying on imports for almost 2/3 of our cooking gas. And even more critical, 70% of our fertilizer imports have to pass right through the Strait of Hormuz. That is a major choke point.
This dependency didn't just happen overnight. It's a trend that's been building for well over a decade. Just look at this chart. Back around 2010, imports were less than a third of our LPG supply. Today, that figure has practically doubled. What this means is that any disruption in that region, big or small, now has a much, much bigger impact right here at home. And this isn't just about high prices anymore. It's now hitting the actual mechanics of trade. The conflict is clogging up the financial pipelines. Cargoes get delayed, and that means exporters are having a tough time getting paid. As this report shows, smaller firms are already seeing a significant drop in business. We're talking 20 to 30%. So, yeah, the ripple effects are really starting to spread through the whole economy. So, with that pretty serious economic backdrop, let's switch gears to the political and governance landscape. We're tracking a few key developments here. First up, the political calendar is heating up. The dates are set for some key assembly elections. We've got voting kicking off on April 9th in Assam, Kerala, and Puducherry. Then, Tamil Nadu and West Bengal start their polling later in the month. The big date to circle on your calendar, though, is May 4th. That's when we get the results for everyone. Next, let's talk about a pretty contentious move over in West Bengal. The state government just announced it's finally going to pay out some long overdue allowance arrears to its employees. Now, a Supreme Court order was behind this, but the timing, well, it's definitely raising some eyebrows. The announcement came less than an hour before the election dates were officially confirmed, which led the opposition to call the whole thing a political joke. Meanwhile, the Supreme Court is also laying down the law on how state police chiefs are appointed. The rules are getting much stricter. From now on, states have to submit their list of candidates a full 3 months before the current chief retires. If there's any delay, they'll need the court's permission. And the court made one thing crystal clear. The whole concept of an acting police chief, that's over. Now, here's a strategic question that's been bubbling up. Has India quietly pulled back from the Chabahar port project in Iran? This speculation really took off after the latest union budget came out and, well, there was no new funding for the port. So what's really going on here? Well, the Ministry of External Affairs stepped in to clear the air. According to their official statement, the situation is pretty straightforward. India made a $120 million commitment for port equipment, and that commitment has been met. It's fulfilled. So this isn't an exit. It's just the end of this particular funding phase. Nothing more is currently due. And finally, for this section, let's look at Uttar Pradesh, where the political stage is already being set for next year's huge election. The birth anniversary of BSP founder Kanshi Ram became a major event, with all the big parties, the BSP, the SP, even the BJP, making a play for the support of the state's Dalit community. And for good reason. They're a powerful voting bloc, making up over 21% of the electorate. All right, now let's check in on how all these geopolitical and political currents are affecting the corporate world. Tying this right back to our lead story, the government is making a pretty big strategic pivot to lock down our fertilizer supply. With so much of it exposed to those risky shipping routes in West Asia, India is actively looking elsewhere. We're seeing a really clear shift towards sourcing from countries like Indonesia, Russia, and China. The goal is simple: make sure our farmers have what they need for the upcoming planting season, no matter what. Now shifting gears to the cement sector. Ambuja Cements is sending a very strong signal to the market. They're focusing on profitability, not just rapid expansion. They do have plans to grow, but the message is clear. They are not going to chase new capacity if it means hurting their bottom line. And as you can see, there's a pretty significant gap they're looking to close with the industry leader, Ultratech. And here's a huge shakeup in the edtech world. It looks like Upgrad is going to acquire Unacademy. But the real story here? It's the price tag. The deal is reportedly worth less than $400 million. Now let that sink in. At its peak in 2021, Unacademy was valued at $3.4 times billion. This is an absolutely dramatic symbol of the massive correction that has hammered the entire edtech industry. Over in the auto sector, we're seeing a fascinating split. While some global giants are hitting the brakes on their EV investments, India's market is flooring it. Sales shot up an incredible 77% last year, and EVs now have a 4% slice of the market. And the money is definitely still flowing in. We're talking over $1 billion in fresh investment from major players like Honda, Maruti Suzuki, and Hyundai. So, that's the news. Now let's shift from what's happening to what it all means. It's time to check out what the experts are saying on the opinion pages. We've got 3 pieces for you today. First, Satvik Varma writes about the right to die with dignity, arguing that Indian law has really evolved to put personal autonomy at the very center of end-of-life decisions. Next, a Mint editorial argues that real energy security isn't just about securing barrels of oil, it's about cutting our exposure to all the financial and logistical risks. And finally, Raghuram Rajan is urging governments to start planning for how AI will disrupt the job market, warning that there are no easy answers here. And finally, let's look at the numbers and see how all this turmoil and uncertainty played out in the markets by the time the bell rang. And here it is, the final data from what was a very, very tough week on the markets. Those geopolitical tensions we've been talking about clearly took their toll. Both the Sensex and the Nifty were down over 5% for the week. But if you want to see the real story of what investors are thinking, just look at the derivatives market. The price of a key Nifty put option absolutely skyrocketed. That's a screaming signal that traders are willing to pay a big premium to protect themselves against more losses to come.
And that concludes your intelligence briefing. We'll continue to track all these developing stories. Thank you.